Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 1, this is Section D2, this is an application topic, document the terms of an engagement in a written engagement letter or other suitable form of written agreement. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions. If you don't know much about our strategies, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. We go over the key ingredients to passing the CPA exam, and again, it's 1 hour, it is free, and we will save you so much time struggling with this process. We will save you months and months of your time. So again, make sure you go watch that webinar, and after you watch that webinar, you're going to want to learn more, and something that you should check out is becoming a SuperfastCPA Pro member. SuperfastCPA Pro members get access to the full 10-question versions of these 5-question YouTube videos. We're only going to be going over 5 questions in today's video, but remember, again, SuperfastCPA Pro members are going to get access to the full 10-question version of the video where I'm going to go over an additional 5 questions to give them a little bit more understanding and help them see things in a little bit different situations. So if you like this and you like our other materials, again, make sure you go check out the webinar and make sure you check out becoming a Pro member. And with all that, let's dive straight into the questions. All right, here we are at question 1. And as we dive into this video, I just want to kind of point out the previous 2 videos have been talking about kind of what needs to happen before an auditor even accepts an engagement. Now, what we're talking about in this video is when an auditor is starting to, or maybe even has accepted an engagement, but we're going to be talking about the engagement letter. And for this first question, let's learn what an engagement letter even is. So let's go into it. Which of the following best describes the purpose of an engagement letter in an audit? So let's walk through the different options. Option A, to document the auditor's findings after completing the audit. B, to outline the audit fees and penalties for non-payment. C, to establish a clear understanding of the scope and terms of the audit between the auditor and the client. And D, to serve as a legally binding contract preventing the auditor from withdrawing from the engagement. Now, based on reading those, and if you've watched the previous 2 videos, based on that knowledge that you may have, this probably isn't too difficult to kind of think through. But if you have no idea what an engagement letter is and what the purpose of it is, that's okay. The whole point of these questions is to learn what we're supposed to be knowing for exam day. So let's go ahead and go to the explanation for this one to learn what an engagement letter is. All right, here we are. The answer is C, to establish a clear understanding of the scope and terms of the audit between the auditor and the client. That's one of the purposes of the engagement letter. So let's walk through this. An engagement letter is a written agreement between the auditor and the client that serves to define the scope of the audit, the auditor's responsibilities, the client's responsibilities, and other terms relevant to the engagement. Its purpose is to ensure both parties have a clear understanding of their roles and the expectations for the audit. This reduces the risk of misunderstandings and disputes during or after the audit. So basically, overview, big picture, engagement letter is to make sure that everybody's on the same page. They know what's supposed to be happening in the audit. They know what they're supposed to do if they're the client. The auditors know what they're supposed to do for the client. You know, basically, again, just big overview of what is going to happen for the engagement. Now, in the following questions, we're going to be talking about specific things that are included in the engagement letter. So let's go to the next question. All right, here we are at question 2. Which of the following is a responsibility of management during an audit engagement? Okay, so which one of these is something that management is in charge of and it's stated in the engagement letter? Option A, designing audit procedures to detect fraud. B, providing the auditor with access to all financial and related information and necessary personnel. C, issuing the auditor's report on the financial statements. Or D, ensuring the independence of the audit team. Okay, so out of all these, which one of them is the responsibility of management? Now, again, if you watched the previous 2 videos, you might have an idea because we've kind of hinted about some of these different things. So if you know the answer, that's great. If not, maybe pause the video to think through this, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, providing the auditor with access to all financial and related information and necessary personnel. So this is something that is management's responsibility. Let's cover pretty much most of management's responsibilities that you need to know. So let's go through each of them. Providing the auditor with a written representation letter at the conclusion of the audit. And we'll talk about representation letters and different things like that through other videos, but they're supposed to provide that to the auditor at the end of the audit. Next one is giving the auditor access to all financial and related information and to necessary personnel for conducting the audit. Now, we talked about this in the previous video. We talked about scope limitations. The management has to give access to the auditor, basically whatever they need to be able to complete the audit. So they have to be able to give them the information that they need. They have to be able to give them access to areas or people that the auditor needs to talk to or access. And now let's talk about the next responsibility: designing, implementing, and maintaining effective internal controls over financial reporting. And then finally, ensuring the financial statements are fairly presented and free from material misstatement, whether due to fraud or error. So again, these are management's responsibilities. These are laid out in the engagement letter so that management knows, hey, the auditor is expecting you to be in charge of these things. This is what we're expecting when we come in to do this audit. So these are management's responsibilities. Let's talk about the other options. The other options are incorrect because designing audit procedures, issuing the audit report, and ensuring auditor independence are all auditor responsibilities. Those are the things that the auditor has to take care of, and those aren't necessarily all in the engagement letter. Those are just general responsibilities for the auditor during the audit. But we've covered the management responsibilities. Now let's go to the next question to learn about some more things that are included in the engagement letter. All right, here we are at question 3. Which of the following is something an auditor agrees to in the engagement letter? So what is something that the auditor agrees to instead of management? We were talking about management in the last question. Option A, to detect all instances of fraud. B, to communicate significant deficiencies or material weaknesses identified during the audit. C, to prepare and file the company's tax return. And D, to design internal controls for the company. Okay, out of all these, again, which one of them is something that the auditor is going to agree to in the engagement letter? Again, based off of just kind of reading through this and thinking through this, you can probably get this down to 1 or 2 of them that are correct and the other ones are obviously wrong. So pause the video, think about this, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, to communicate significant deficiencies or material weaknesses identified during the audit. That is something that the auditor agrees to do in the engagement letter. Before we dive into the explanation, I just want to point out one thing. And I've pointed this out in previous videos, if you ever see something, especially in audit, that has an option that basically is an extreme option, such as this option A up here, to detect all instances of fraud, that is almost always wrong. An audit is basically never totally comprehensive. It is almost impossible to detect all instances of fraud or make sure that everything is completely correct. It's just, we're all human, and it's pretty much impossible to reach that level of perfection. So if you ever see something like that in an option, almost always it's wrong if it's saying that the auditor is going to perform everything perfectly or they're going to find all instances of fraud or whatever the case is. Almost always that's the wrong answer. So I just wanted to point that out. Now let's go to the explanation. In the engagement letter, the auditor sets and agrees to clear expectations for the engagement. These include, however you want to say that, agreeing to communicate significant deficiencies or material weaknesses in internal controls that are identified during the audit. That's kind of one of the biggest parts of doing an audit is finding those significant deficiencies and communicating those. They're not supposed to fix them, but they are supposed to communicate them. And then one other thing that wasn't mentioned in the above options, but this is something important to know, stating the inherent limitations of the audit. And this kind of goes back to what I was just barely talking about in option A, such as the fact that audits are designed to provide reasonable assurance, not absolute assurance, and may not detect all instances of fraud or error. So this is actually something that is stated in an engagement letter. The auditor states very clearly to management, hey, there are inherent limitations when it comes to an audit. It's impossible for us to catch all instances of error or all instances of fraud. We are not providing absolute assurance. We're just providing reasonable assurance. So that is something that auditors are going to communicate to management in the engagement letter, the inherent limitations of the audit. Now let's talk about the other options. They are not the auditor responsibilities. Detecting all instances of fraud, like we were talking about, is beyond the scope of an audit. Preparing and filing tax returns is a separate engagement outside the audit, so that's not really going to be a part of the engagement letter for an audit because tax returns are separate. And then designing internal controls is management's responsibility. We talked about that in the second question. All right, so those are some things that the auditors are going to agree to or communicate in the engagement letter. Now let's go to the next question. All right, here we are at question 4. Which of the following is a communication the auditor will make to management or those charged with governance regarding the audit? Okay, let's talk about the options. A, the detailed findings of the audit before the report is finalized. B, the strategy, timing, and scope of the audit, including the involvement of additional personnel. C, the financial performance of the company compared to prior years. Or D, the auditor's assessment of whether management's decisions align with best practices. Okay, so which of these is something that the auditor is going to communicate to the management in the engagement letter? So if you have any idea based on what we've talked about, that's great. If not, maybe pause the video and think through these, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, the strategy, timing, and scope of the audit, including the involvement of additional personnel. So these are things that the auditor is going to communicate. So kind of similar to when they were communicating there's inherent limitations in an audit, these are additional things that they're going to communicate. As part of their responsibilities, auditors communicate with management or those charged with governance about the planned strategy, timing, and scope of the audit. This includes informing them about the overall approach to the audit and significant risks identified, the planned involvement of additional personnel such as specialists, internal auditors, and predecessor auditors, and we talked about predecessor auditors in the previous video, and the timing of audit procedures and key milestones. One thing I want to point out there though, they are not going to tell the management or the client exactly every single little thing that they're going to be doing. They're not going to be telling them the exact types of audit procedures that they're going to be doing or anything like that. Again, this engagement letter is a very general overview of what the engagement is going to do. So that's why you see a lot of overall or the timing of audit procedures, but you're not telling the management the exact audit procedures that you're doing. It's a very general document. It's not an extremely specific document when it comes to like the nitty-gritty details. Now let's talk about the other options. They are incorrect. Detailed findings are typically communicated after the audit is completed, not before. So if auditors are finding problems or things like that and they have details, again, that's not going to be in the engagement letter because the engagement letter is before the audit has even started. So they're not going to have any super detailed findings at the beginning of the audit when they're doing the engagement letter. Also, the auditor does not evaluate the company's financial performance or assess whether management's decisions align with best practices. Again, audits are just to make sure that there is compliance, make sure that the financial statements are correct, but they are not there to assess the performance of the company. The auditor report is basically saying that things are accurate and correct and they can be trusted on. And again, we're going to talk about the actual like opinions during audits and things like that in future questions. Now, with all that, let's go to the next question. All right, here we are at question 5. Which of the following is typically included in the engagement letter for an audit? Okay, we've talked about a lot of different things, so hopefully some things in these options stick out to you. Option A, a summary of all audit procedures to be performed. B, a detailed list of significant deficiencies in internal controls. C, the auditor's responsibilities, management's responsibilities, and the billing arrangements for the engagement. Or D, the auditor's evaluation of the company's financial health. Now again, based on the previous questions, I think that probably you already know the answer because we've talked about all of these things so far. If you don't know the answer, that's okay. Pause the video, think through this. But if you are ready, let's go ahead and just look at the answer together. All right, here we are. The answer is C, the auditor's responsibilities, management's responsibilities, and the billing arrangements for the engagement. That's, basically what the point of the engagement letter is. Now, we've talked about all of these different things, so we're just going to give a quick overview of pretty much everything we've covered so far. The engagement letter serves to establish a clear understanding between the auditor and the client. Key elements of an engagement letter include the auditor's responsibilities, such as performing the audit in accordance with applicable standards, management's responsibilities, such as preparing the financial statements and maintaining internal controls, billing arrangements. We haven't really talked about that yet, but that is something that it's part of the engagement letter, which specify how the client will be charged for the services and the scope and objectives of the audit as well. Remember, this is an overview. This is not something that is going to be extremely detailed, so let's talk about the other options as well. The other options are incorrect because a summary of audit procedures is not included. The focus in the engagement letter is the overall scope of the audit. So again, they are not summarizing every single little procedure that they are doing. They're just saying, here's the scope, here's generally what we're trying to look for and trying to do. Significant deficiencies are communicated after they are identified during the audit, not in the engagement letter. Again, how could you identify a significant deficiency before you've really even started the audit? The engagement letter is basically at the very beginning of starting an audit to make sure everybody's on the same page. And then finally, the auditor does not provide an evaluation of the company's financial health as part of the engagement letter. That is not the auditor's job to assess financial well-being. They are just there to make sure that everything is accurate and is presented fairly and correctly. Now, with all that, we've covered a lot in just 5 questions. We've covered a lot of what goes into the engagement letter. Before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2, 3, 4 questions trying to teach you the management responsibilities or about the inherent limitations of an audit or whatever the case may be. You see 2, 3, or 4 questions, these things pop up, they are the pillar topics. So you take the time to write these out in your own words so that you know what is most important that you learned from the questions. And as you do this each day, you are building your own personal repository of the most important things that you learned from the questions in your own words so that you're ready for test day. With that, let's go to the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive into them. First off, what's the purpose of the engagement letter? Just in general, establishes a clear understanding of the audit's scope, responsibilities, and terms, including billing terms. That was what we talked about at the end there, between auditor and client. Now let's talk about management's key responsibilities. Management is responsible for preparing accurate financial statements, maintaining effective internal controls, and granting the auditor unrestricted access to necessary information and personnel. They must also ensure the financial statements are free from material misstatement, whether due to fraud or error. And again, this is all set forth in the engagement letter. So these are the responsibilities that are given to management or expected of management in the engagement letter. And then let's talk about the auditor's responsibilities. The auditor is responsible for planning and performing the audit in accordance with professional standards to provide reasonable assurance about the fairness of the financial statements. They must communicate any significant deficiencies or material weaknesses identified in internal controls to management or those charged with governance. That is one of the most important things that auditors do when they are doing an audit. Now let's also talk about the communications that auditors have and these are set forth in the engagement letter as well. Auditors inform management or those charged with governance about the planned audit strategy, timing, and scope. They also must, looks like I misspelled that. Sorry about that. They also must clearly state the inherent limitations of an audit and the involvement of any additional people such as specialists, internal auditors, or predecessor auditors. So these are the things that auditors are going to communicate to management. These are the responsibilities of auditors. These are management's responsibilities. All of this is set in the engagement letter. Again, it's basically an overview of what the expectations are, what's going to happen in the audit, but it's an overview. It is not super detailed, exactly every single little thing that the auditor is going to do in the audit. Now, with that, we've gone over the pillar topics and the first 5 questions, and that is the end of the YouTube version of the video. Remember, we only went over 5 questions in today's video, but SuperfastCPA Pro members are going to get access to the full 10-question version of the video that I'm about to finish recording right after this. So if you like this and you like our other material, you like our other videos, remember, become a SuperfastCPA Pro member and you'll get access to a lot of great stuff, including the Pro course and the 10-question versions of these multiple choice question walkthrough videos. Now, before you go, make sure you check out the webinar on SuperfastCPA.com. It is 1 hour, it is free, and we will teach you the key ingredients to passing the CPA exam, and that is the best first step when you are trying to learn more about SuperfastCPA and trying to become a pro member. Check out the webinar first. I promise it's worth it. And finally, if you liked the video, make sure to like it and leave a comment. I hope this video was helpful, and I will see you in the next video.